All right, welcome everyone. This is Bob Maurer. It is about 11:40 a.m. on Monday, Jan 6. Well, we officially got past the holidays, Christmas and New Year's over the last couple weeks, where we had a couple days off because of the exchanges recognizing those holidays and also just relatively quieter trading sessions in terms of volume surrounding those days too. So past that, and we are good to go into this new year with this first full week. So December was a bit of a blur. I was out of town for a little over a couple weeks, and then came back for about a week, and then the holidays hit. So things have been a little bit slow in terms of publishing new trades, but nonetheless, we had a couple, and there is one ongoing. So let's go ahead and do an update. And then this week, I will finish up with some new opportunities as I see them. Just got to do some final analysis on the seasonal futures spread strategies, and then I will get those published and get them out to you. All right, so without further ado, let's get into it. Dialing into the portal, you'll see the most current PDF version strategy sheet right here. Click on it and bring it up. So that's for this week, the week of 1/5. Slide on down, and here's what we're working with. So the only one that's still active right now is 342 on the bottom row. It is the lean hog June versus July. So we'll look at that one. Just above it, 341 bear spread and RBOB unleaded gas. I'm recommending we cancel that one. And then just above that, 340 the bull spread and oats did not work out, got stopped out for a loss there. We'll look at that one. And then 332 the bear spread in WTI light sweet crude, which ended a couple weeks ago, but this is the first update since then. So we'll look at that one. That one timed out. All right. So really just one ongoing spread down here on the bottom, that lean hog. Let's hop over to the charts. Take them one by one. First of all, the crude oil here. So this was 332, ended on December 23. It was a beer spread. And for a number of weeks, it had basically been moving sideways in roughly about this range of, say, 40 down to 13. Came really close to getting out back here. So it would have been nice to get that first target. Officially, it got down to 12, and our target was 11. So pretty close. And then again, another retest here. But then ever since this big bar to the downside on December 6th, market started climbing back up towards the top end of the range and actually pushed into new swing highs just before the seasonal window ended. So what happened basically is that we lost some money on this one. If you got in at, well, I should say maybe you lost some money. If you got in only at entry level 2, if you stuck with this all the way to the end, you might have picked up a few ticks because basically the closing range was 45 high to 37 low on the last trading day of the seasonal window. And our level here that we got into was 47. So depends on if you did it because it was right towards the end of the seasonal window and how you played it. But for the most part, it would have been those who got in at entry level 1 at 36. If they sold it again at 47, their average would have been about 42 and probably ended up with a bit of a loss. So manageable loss, but nonetheless a loss. So this one's going to go off our board and in the books as a loser. We'll look for another opportunity in WTI light sweet crude down the road there. So that's 332. Take care of this alarm really quick here. Keep my eye on a couple things while I do this. All right. So next is the oats. So the crude timed out with a bit of a loss, likely. And then this one was just a flat out loser. So this is the bear spread number 340, bull spread in oats number 340. And as you can see, we were looking to pick a bottom here. It was counter trend. And this thing had been on a good move to the downside. Tendency is for this thing to stabilize within this window and move higher. We weren't asking for a ton. We're just asking for about a 5 or 6 cent move. So we weren't asking for a ton, but nonetheless, it just stuck with this trend to the downside and broke through our entry level 2 about a third of the way through the window. Entry level 1 pretty quickly got filled right at the beginning of the window. So basically, an average in scenario where the average price would have been about negative 4.5, negative 4.75, somewhere in that range. And the market broke on down into that negative half stop pretty quickly after modest bounces. So this one just didn't work out, didn't align with the seasonal tendency. So it's going to go down as a loser to the tune of, if you're an average in trader, about $400 per spread. All right. And if you're just a regular entry level, more conservative level 2, would have been a risk of about 138 per spread. Was going off the books as a loss. Okay, then we've got RBOB. This one I am recommending we cancel. You can clearly see why. Up a little bit. Looking to get short. Never got up to our entry levels, negative 2062 or negative 2023. It just kind of moved sideways and then pushed lower. It was a pretty short window of opportunity, just a couple weeks in here. So it had to move quickly to the upside and then quickly back to the downside, instead of just kind of drifted lower. And it looks like it's going to possibly hit our first target here, but not necessarily with, obviously without us on board. So this one I'm going to recommend canceling. There's no time left in this one to speak of. So no reason to continue with the original profile. All right. So number 341, RBOB unleaded gas, bear spread. Did what it was supposed to do, but unfortunately without us on board. So canceling this one. Go down as a missed opportunity. Then last but not least, Lean Hog beer spread number 342. And these are our entry levels. So it benchmarked at -5 back on the 26th of December. Entry level 1 is up here at positive 45. Level 2 is positive 95. Stop is 162. Target 1 is negative 85. Target 2 is negative 145. So basically in a range, it's still in it. Range going into this spread, roughly on the high side, 22. On the low side, about negative half. So a 75-cent range. In terms of dollars, it's $300. And we're still in it, right? Markets moved up, stalled, moved down. So far, stalling. This white line is the 200-day moving average. Might be holding it up a little bit for the moment. We'll see how it plays out. So we need this thing to rotate back up, break into new highs, allow us to get on board, and then falter on back down to retest the bottom of the range. All right. So nothing done on this one. No change to the strategy. We are sitting on the sidelines. We've got a pretty long window of opportunity here. So we'll just be watching this one over the next few weeks, see what happens. All right, so 342 is ongoing. The RBOB unleaded gas canceled. My recommendation. Oats was a loser. Crude was probably a loser for most. And that's where we're sitting at the moment. So let's regroup, look for 2025 opportunities. I think it's going to be a bit of a wild ride in the beginning. We've got exactly 2 weeks until the new our president-elect gets sworn in, and we'll see what kind of ramifications work through the commodity world relative to whatever policies they choose to enact getting in the first couple weeks, and we'll have to play it accordingly. So that's where we're at. I'm going to leave it there, and thanks so much for watching.